Okay, so you're watching the first video in what we're going to be doing a weekly video specifically on what you know about your variable rate mortgage. 2022 is going to be a crazy year as we anticipate there will be some rate changes, but we have one of the strangest economies that I've really ever seen. And, we want to be very careful about mirroring this to past, the financial crisis of 2008, the stock market crashes in the 80s, or, people talk about, I remember the time when rates went up 20%. We'd be very careful to make parallels to those times as, every time is really unique. So if you're watching this is actually January 24th. So this is prior to a Bank of Canada meeting. Now, here's the thing. We expect that the Bank of Canada will change the rate this week. So we expect the Bank of Canada will change the rate. So really watch our channel and watch our email. Like I said, we're going to send out once a week emails on variable rates and what you'd be watching for. What we don't want to have happen is have a whole bunch of people charging in, locking in their rates when that wouldn't make a lot of sense to really want to like a lot of people, this becomes very worrisome that they're going to go to certain different lengths. So watch, there's a video we're going to put on our channel just on, what if rates double? What if rates tripled? How much extra is that going to cost you on a monthly basis? It's very, very small. And just to be aware of that, that's going to make you sleep a lot better at nighttime. So that's really important as well. So as we sit right now, Bank of Canada is planning on moving the rates this week. They'll probably be 0.25%. So for the vast majority of our clients, 1.45 is their rate, 1.7 would be your new rate. And so really nothing bad from that perspective. If you came into a situation where you're any higher than that, we need to get together and do a payment reset, renew the mortgage at the lower variable rate, because that's still going to be available this week. So really, really important for that perspective. Get that payment down as quickly as possible. The other thing is if you have a TD mortgage or subletted mortgages, your payment won't ever change. So just be aware of that as well. Your payment won't change on some mortgages, even though your interest principal is going to change. So first off, before knowing the rates can go up, why are we not looking to lock in low? Let's see here, because we're going to have another video after the decision actually officially made about rates moving up. Now, what would be the situation where we might say, why are we saying don't lock in? Well, first of all, know that rates do not just move accidentally. The government strategically moves the rates up. The idea of moving the overnight rate up is to make borrowing more expensive between banks and subsequently between borrowers to curb the cost of goods and inflation. Now, this becomes a no-brainer these days as inflation is going through the roof. But is inflation going through the roof? This is something we don't see talked about a lot. The problem right now is that there is a number of industries where the cost is absolutely skyrocketing. And there's other industries that they're in very dire straits. If you go into a restaurant, you go into a retail store these days, they'll tell you that a rising cost for them or a rise on their operating line of credit would be pretty detrimental. A lot of businesses have been affected by COVID lockdowns or anything like that they're going to have a hard time handling rates. And that's going to delay the onset of a lot of rate increases, or at the very least, this is a very slow process. Moving rates back up to pre-COVID levels, it could be really a number of years, and depending on a lot of factors, they have to get basically a rate moved up and have the economy respond in such a way that they're okay with it, that they continue, they don't push it into a recession or anything like that. So that's very, very important. And right now, half of the industries across Canada are really not a situation where higher interest rates are of any benefit. Yes, housing, that would, house prices are going really crazy, and so that's what that's designed for as well. So be aware of that. Secondly, really know that a big reason around variable has nothing to do with rising rates. It has to do with the penalties. If you go and sell, if you go and need to refinance, if you get divorced, anything like that is going to create a situation where you're going to need to lock a rate in, sorry, not lock a rate in, but where you're going to pay a penalty, an interest rate differential, not lock a rate in, pay a penalty, that's an interest rate differential. That interest rate differential means that your penalties can be 1/5 greater. So let's take an example of a $400,000 mortgage. You can be looking at a $60,000 penalty over like a $1,600 penalty, and so pretty major. And you'll see people go, oh well, the bank might blend it. These are all pipe dreams. These are all things that are programs that might mitigate the penalty a little bit, but they certainly do not eliminate it. And if anybody's telling you that, that's totally wrong information. So we have to be very aware that the majority of Canadians are not going to last 5 years on their home. It's not the same as other places. You're not You're going to need equity out because you're holding a lot of wealth in there, or you're going to have a job change. I mean, we have a situation right now where the economy is very shaky, and you don't know if you're going to be in the same job, same position, or want to live in the same place as 5 years down the road. And so this is very, very important. Going into a fixed rate is going to really take away those options. It's going to really eat away at your equity. So as per normal, we're going to send out a little video of this every week. And please watch these and pay attention. But, the choice is going to be yours. If you do want to lock in, of course, we're going to help facilitate that. Have a great week.